when I think over history, the history of the stock market as we know it today, and we always talk about these three pathways that investors can take. The first pathway is if they need cash, and they're nervous, they produce 18 months of cash into a money market account and let the remaining portion of their portfolio hold its allocation, right? So if you're super nervous, hold cash. In a dollar amount enough to cover your cash flow needs over the next 18 months. If you're nervous but you don't need cash, maybe you dial back your allocation. So if you're 80% stocks, 20% bonds, and you can't sleep at night, you go from 80-20 to 60-40 or some more conservative mix. And the third type of investor is one that doesn't like this environment because it makes them uncomfortable, but they do nothing. They stay patient, they stay disciplined. But as you're talking about, do I buy the dips? I actually think there's a fourth type of investor, one that's let's say 70-30 stocks to bonds, that then shifts some of the bonds over to stocks today. That makes that move from something more conservative like a bond or cash into stocks, because a lot of people are going to say, well, geez, I wish I had cash to buy. I don't have cash. I'm fully allocated. Well, you can adjust that allocation. And maybe it's blind faith in the history of stocks that I have when I make this stance. But I think that over time, when you look at the outcome for investors using those four scenarios, that the best outcome comes to the person who's actually getting more aggressive during an environment like this, and compared to the one that does nothing, compared to the one that maybe changes their allocation, compared to the one that goes to cash in some way, shape, or form. So my blind faith in the movement of stocks over time is one that those who do buy the dip over time will end up with the best outcome, even if that outcome temporarily gets worse, because we don't know where the bottom is, if we've reached a bottom or if we're anywhere near a bottom. So things could certainly get worse before they get better. But when I look out 5 or 10 years, if that is the time frame that you're dealing with, my gut says that those who are buying dips, and as long as they're doing it not as a one-time move, not as a one-time event, but they do it with in some systematic, consistent nature, that over time they end up benefiting.